Hey everybody, Rob Maurer here, and today we've got a pretty exciting episode as Tesla has just published their white paper for Master Plan Part 3. We knew this was coming from Investor Day, and Tesla's already shared a lot of this information with us, but this gives us a much more granular look at how Tesla plans to transition or be a part of the transition to a fully sustainable energy economy. So pretty exciting stuff that we'll go through, and then we do have quite a few other topics as well tonight, so probably going to be a long one, but I'll put timestamps once we're done with the live stream down in the description. All right, we'll start off with the stock. Just a quick look here. Tesla down 3 2/3% today to close at $185.52. While the NASDAQ, not my normal screen even, the NASDAQ down 1.1% on the day today. So a little bit of an underperformance to Tesla's beta, but not anything too out of the ordinary there. And then if we just quickly look at a couple of investor filings, SEC filings, before we get into the master plan stuff, there was an 8K today that showed that Tesla has made some adjustments to their bylaws. And this allows any stockholder or any group of 20 or less stockholders that own 3% or more of Tesla's outstanding shares to nominate board members, potential board members, to be included in Tesla's proxy materials for their annual meetings. So basically just allows more people to nominate, more flexibility on nomination for board members as a part of those adjustments. So nothing too major there to understand, but could have some impact on those proxy materials that we'll end up seeing, which we should get really soon for this year. And then we do also have a form for this from Kimball Musk, 100,000 shares exercised and sold from Kimball. This trading plan was put in place on December 8th, so probably right around $20 million of stock with that transaction. All right, next we will get into this master plan. So Tesla publishing a 41-page document here. Lots of details. We're not certainly going to get to all of those in this episode. We'll probably come back to many of these things as we've got more time to look through it and digest what the information that Tesla is giving to us here. But as you can see, this gives us a lot more information on the things that Tesla walked through at Investor Day, more of the specifics behind their assumptions, which obviously we've talked about at a high level, to get to that fully sustainable energy economy, where Tesla has talked about that taking a $10 trillion investment over 10 years or so, 10 or 20 years, and that actually costing less than what it would cost to support the current infrastructure for the fossil fuel-based economy. So it goes through a lot of waste stuff, utilization stuff, which we've talked about before. A couple examples here though. Looking at a Toyota Corolla and the consumption that the vehicle takes through the life of the vehicle, and comparing that to an electric vehicle like the Model 3, no comparison. It's maybe 20% or so of the consumption. So Tesla walking through that with vehicles, and then just in terms of other power that's needed to support the economy, they also share similar statistics on gas furnaces versus heat pumps. You can see sort of a similar reduction there in input energy and heat delivered from the heat pumps. And then of course, they'll also walk through energy generation, energy storage, and all those things later on, which we'll talk about as well. Looking here though, this is a slide that seemed to get quite a bit of attention, probably the most attention so far, because it walks through Tesla's sort of assumptions on how the electric vehicle market breaks out for batteries. So they shared a slide on this, but this is a little bit, again, more granular for Tesla's vision for how the automotive fleet is going to break out. So based on previous run rates for the automotive industry, being around 90 million vehicles per year, Tesla breaks that down into, I think we've got, 8 segments here, something like that, where about half of those vehicles are in that compact segment, where of course we expect Tesla to introduce that next generation vehicle. You've got maybe another fourth in that mid-size segment, passenger and commercial vans, large sedans, SUVs and trucks, buses, and then short-range heavy trucks and long-range heavy trucks. And in this table, Tesla gives us a couple of interesting details. The first one, obviously up here, being the pack size in kilowatt hours that Tesla is kind of putting in here as an assumption for the compact segment. So they've got 53 kilowatt hours in here, which would add up to, across this total fleet, 36 terawatt hours needed per year or not per year, but in total for the global fleet, 36 terawatt hours needed. I think that's total. I have to run the math on that, but and we can see that would be obviously the largest segment in terms of battery need. So this doesn't necessarily mean that Tesla's next generation vehicle is going to be 53 kilowatt hours. I think that's been the assumption that a lot of people have sort of layered into that. But this is just going off of sort of industry estimates for Tesla, not necessarily exactly what Tesla plans on doing, though it gives us an idea of the ballpark that Tesla is probably thinking about. like we see with other Tesla vehicles, there's probably going to be a range here too. Like if we look at the mid-size segment, Tesla says 75 kilowatt hour packs here. We know that the Model Y and Model 3 have 82 kilowatt hour packs in some circumstances, and then smaller packs as well. So Tesla with the compact would probably do something similar where they've got a range. And then a couple other interesting things in here, just the TBD, obviously Tesla putting that as the Tesla equivalent in the compact segment. We know that would be the next generation vehicle in that segment. But then for commercial and passenger vans, it's something we've talked about a lot, and Tesla putting TBD in this segment as well. Putting that at around 100 kilowatt hour pack, so similar to what we see from the S and the X. 10 million vehicles sold per year, so slightly higher than what Tesla views the large sedan, SUV, and truck market as, which notable inclusion there of trucks. But a relatively big segment, about half the mid-size segment. So we've talked a lot before about how we do kind of expect the sorry, just making sure everything's good here with the comments. We've talked before about how we expect Tesla to introduce something in the segment, and I think the TBD in here makes this look a lot more likely that Tesla will do that. Then we also see a similar thing in bus, which we heard about in Master Plan 2, Tesla trying to develop a minibus or something like that. And with this broken out as its own segment and not lumped into something like the short-range heavy truck, it seems like maybe Tesla would have a plan there as well. Interesting to note with both this bus segment and then also the short-range heavy truck segment, Tesla lists the cathode as LFP, so lithium iron phosphate, and the pack sizes from 300 to 500 kilowatt hours would be obviously massive LFP packs, but Tesla feels like they can get the energy density with these LFP packs at a level where they can accommodate that for some of these bigger vehicles that we don't yet have in production. And then rounding that out with the long-range heavy truck, obviously the current Semi, which Tesla's referring to here as the semi-heavy versus semi-light in that shorter range or smaller heavy truck segment. So they say high nickel here, they say 800 kilowatt hour pack size. So again, we don't know for sure that that's exactly what the pack size is for Tesla, but gives us a pretty good assumption to work off of, which was kind of what the math had been showing us previously. So a lot of interesting stuff here, and we'll continue on because we've got a lot more to go. In terms of other segments of transportation, Tesla talked a little bit about boats and planes at Investor Day. So they broke down a little bit more on their assumptions there. Probably the most interesting thing for us here, I know a lot of people have interest in Tesla doing an electric plane, things like that, but they say that they estimate that shorter distance flights should be electrified while longer distance flights, which they say is about 80% of air travel energy consumption, should be powered by synthetic fuels, generated of course from renewables. So kind of interesting to see Tesla's assumptions on that. I think a lot of people are hopeful that maybe Tesla would get more involved in that space, but I think this makes it a little bit less likely that Tesla makes, pretty significant efforts in that area, with 80% of it, the expectation 80% of travel there from airlines being synthetic fuel based. So just kind of a note on that. They view the need for batteries per year for this electrified fleet for shorter range crafts to be only 7 megawatt hours. 7 megawatt hour packs there, adding up to 0.02 terawatt hours of batteries, compared to ships, which would need, by Tesla's estimates, about 40 terawatt hours. So it just shows this is, for planes, they view that as 0.05%, 1/2000th of the battery need for ships. So in terms of the things that Tesla's been pursuing, we see them definitely pursuing those larger areas of need. Probably doesn't make a ton of sense for Tesla to put a lot of effort into something that they view as such a small amount of need, where that return is probably not going to be quite as good. Now, the counter argument to that would be, okay, it's smaller, it's a little bit easier of a segment to fill, but there's obviously a lot of engineering that would come alongside moving into that segment. So probably temper expectations a little bit based on Tesla's assumptions here with anything in the air space, I suppose. Now into energy generation and storage, Tesla's shared their breakdown of how they view energy from renewable power, rather from wind, from solar, from things like nuclear and hydro. So you can see they view the need as about 5 terawatts of energy generation capacity. They view that about 2/5 from wind and about 3/5 from solar, with nuclear and hydro just kind of rounding that out a little bit, but predominantly wind and solar. And we can see from this graph how Tesla kind of views that. This is just an example of how they view it through, one short period of time in the fall. And what's most interesting about this is that Tesla expects there to be a lot of excess energy generation capacity that's makes it we've talked before about the levelized cost of ownership of energy, and that's where Tesla is drawing these assumptions from. Basically, how do you balance the energy generation required with the energy storage required to make this transition as cost effective as possible? So the more power generation you have, the less storage you need, and vice versa. So Tesla basically doing their modeling and figuring out what that mix should be, which is, again, going into these assumptions for energy generation capacity and energy storage capacity, which we'll talk about in a second. But from a generation perspective, you can see kind of how this would look throughout the days for a renewable sort of system. So one of the most interesting things about this is that Tesla does expect there to be a significant degree of curtailment needed, which is basically when the production is too great, the supply is too great from the energy being produced, that just needs to be reduced because the demand can't keep up with that. And obviously there needs to be a balance between those things in the energy infrastructure. So Tesla viewing the curtailment needs, I think it was 20 or 30% or so, obviously during the peaks where you've got wind generation stacked on top of solar generation and your battery capacity probably full at that point in time. So there's going to be interesting opportunities that brings, maybe not right away where we can utilize all this energy that's being produced, but over time there's going to be probably entire new industries that pop up to take advantage of those curtailment needs and the free energy or the very low cost energy that provides. And obviously we already kind of see some of that today, but as the entire economy transitions, it's going to be a very interesting problem to solve and lead to some interesting use cases for energy. I think hydrogen will probably be a part of that. We talk a lot about how that doesn't make a lot of sense in vehicles, but as a part of the energy storage grid, I think it does. And Tesla talked a little bit about that, which we can also see in their energy storage assumptions. So anyway, looking at energy storage, we won't go through all the details here, but one thing that I thought was interesting was their assumptions on lithium-ion storage for 4 to 8 hour capacity, which is kind of what we see the Megapack setup being today. Tesla says that for 2030 to 2040, they're estimating the installed cost of this to be $184 to $231 per kilowatt hour. So kind of interesting note there that we can put into our modeling for Tesla Energy for sort of the out years in terms of what we could expect Tesla to generate for revenue on that. And obviously, if we assume Tesla's going to be doing a terawatt hour per year on that energy storage business, well, you can work pretty quickly into what sort of a revenue figure that would be, which, something we'll come back to in a future episode. In terms of the land area, this is something that I think a lot of us understand, but Tesla just mapping it out really nicely here. This is the amount of land that would be needed for solar energy and for wind energy per continent, essentially. And you can really barely see these pixels. Obviously, a lot more space there in Asia, but the energy, the space needed for this type of renewable energy generation, incredibly small. And I think it's not something that's very well understood. Obviously, this needs to be distributed and things like that. But in terms of the actual space that this is going to take, it's really not a lot. Tesla's saying it's basically 0.2% of land area that is needed for this type of generation, which again is multiple terawatts of power. And then they also walk through the investment. So this is pretty interesting where Tesla, they gave us that $10 trillion figure that would be needed. As we mentioned at the beginning, or as I mentioned at the beginning, that would be, by Tesla's estimates, cheaper than what it would cost to even maintain the current fossil fuel economy over that period of time, just in terms of the infrastructure. So it's kind of like a no-brainer that this should be done. But what's interesting here is kind of the breakdown between categories and how Tesla has chosen to focus based off of that breakdown, I think. And this kind of goes back to that comment on planes as well. But with vehicle factories, they're estimating that to be about $1.8 trillion. Battery factories, $2.2 trillion, a little bit extra for things like Megapack and those items for energy storage. Specifically, they also talk about, let's see, oh man, I lost my place here. Transportation, mining, and refining. So that's something that we've seen Tesla start to get into a little bit more with the Corpus Christi lithium refinery plants. It's very early stage for Tesla, but that is another major category where Tesla expects the investment needed there to be $1.7 trillion. So if you look at this breakdown of 10.4 trillion, and you kind of look at those three categories between vehicles, between batteries, and between materials refining, Tesla is playing in essentially about 60% of those categories just from those major things there. And there are probably other things in here that Tesla's got a little bit of stuff going on with solar panels and related. So, this is something we've seen from the impact report, how much of the economy Tesla's business touches and is going to touch over time. But I think this spells it out super clearly and also gives a good sense of why Tesla's making the investments that they are and where they're focusing their attention. As we talked about heat pumps a little bit earlier, I thought it was kind of interesting that they only put that at about $60 billion here. They say that assumes $3 billion in manufacturing capex to replace home heat pumps and conservatively $30 billion for all heat pumps. So interesting to see, Tesla view that as a little bit lower of an investment need, but as they walk through a pretty big impact in terms of the difference in energy consumed. So with those two things, it makes it a pretty obvious point of focus for Tesla to pursue. They also talked about recycling here. I'll just go through this quickly, but they eventually view the need for recycling to be 11.5 terawatt hours per year. So we've talked about that being a big opportunity before, but Tesla is spelling it out super clearly there as obviously eventually, once we have most of the economy electrified, that those materials can be recycled not in perpetuity, but with a 98% recycled rate. You can do that many, many times over and do it more cost effectively than drawing from mined materials. So it'll be interesting to watch that transition, but obviously Tesla viewing that as a big part of where things are heading. And then they also just kind of walk through, all the materials that they view as needed. I think this really just gets the point across about how this is possible. With the current reserves of these materials, Tesla, I don't know where that graph was at, but Tesla showed a graph of it being, in sort of worst case for some of these materials, maybe 10 to 15% of the reserves that would be expected for them. So totally doable in terms of the dollars invested, in terms of the materials that are needed, and in terms of the technology that is available to do all these things. And hopefully this white paper, all of this detail helps people understand that. And I think Tesla's goal with all of this is to push things in this direction, which obviously Tesla has been doing for a long time, but to help people understand this is what's going to happen, this is why it's feasible, and this is what we need to do that. So make your investments in these areas, which Tesla is obviously a shining example of leading on that front. So super grateful for Tesla for publishing this. And again, we'll probably spend more time going through things as a little bit more time to understand them. But a lot of fascinating stuff that Tesla has put together here, and I'm appreciative that they share this stuff with us. All right, we'll move on from the master plan part 3 update now. I know that was a long one, but we do have a few other items here. We'll start off with some supercharging updates. Pretty exciting stuff here from Drive Tesla Canada. They have learned from a supercharging permitting discussion that was some details shared by a senior project developer at Tesla, basically as a part of this supercharger project in Canada, that the superchargers in this new location in Canada would have a capability of up to 350 kilowatts. So there's been speculation on what this new rated charge would be. I think 350 kilowatts has kind of been the rumor, and that seems to be confirmed here based on this presentation for a version 4 supercharger. It also says that this would have the Tesla connectors, which would allow Tesla as well as non-Tesla vehicles to connect, and would also have the CCS adapter, so probably Magic Dock, built into those version 4 superchargers. Marco RP on Tesla, or on Twitter, who has followed superchargers super closely, has also shared this information. So maybe a second source, maybe drawing from the same source, but that kind of looks like where we're at for V4 right now. This did say, though, a little bit more information that the 350 kilowatt output would be in about a year from now. So like we had talked about with that initial version 4 supercharger that we saw, I think in Norway, doesn't seem to be at that capability yet, but something that Tesla would unlock over time. And then also on supercharging, Tesla has opened up voting for their next round of supercharger location selection from the community. Pretty fun thing that Tesla does, I think, quarterly. So they just published they previously published the winners for the winter contest. Now we're into the spring contest, and you can see some of my votes here. I got to throw in a shout out for Ames. It's where I'm from. So I would love to see Ames win. It was in 4th place actually in North America last night. It's dropping in the rankings down to 16th now, but if you want to throw a vote to Ames, I would really appreciate that. Right now, Starbase is winning, and I did vote for that one as well. It would be nice to have a supercharger down there, though I think Tesla would probably end up putting one at Starbase anyway. But kind of a fun thing that Tesla does, and I would encourage people to go vote for that. There is a link in the description to do that if you so choose. All right, next we've got an update on Giga Berlin. This is sort of stuff that we've already talked about, so nothing too major here in my opinion, but there has been some plans published by the municipality of Grünheide that is walking through Tesla's, again, plans for what they're going to do with Giga Berlin. And as we've talked about before, part of these plans is for Tesla to build a logistics and warehousing center that's pretty sizable. And it talks about how that would allow Tesla to switch from a little bit of just-in-time inventory and parts coming in to more parts on hand, which I think, given the supply chain challenges that have occurred in the industry over the last couple of years, is probably something that a lot of companies in the auto industry and beyond are going to be making those types of switches as well, just to have more confidence in what the supply is. So Tesla building some space at Berlin for that. But again, we've already sort of talked about that. So I don't think anything too new. And then it also talks about just trying to sort of, from a zoning perspective, have this all zoned as sort of the same industrial area. So we'll see more on that. Nothing in terms of actual factory expansion plans in this update. Also with Giga Berlin, we do have an interesting update here from the design studios in both Turkey and Israel. They are showing the rear-wheel drive Model Y available in the new colors, in Quicksilver and Midnight Cherry, which we know Tesla is only producing those at Giga Berlin. So it looks like Tesla is now planning to add another vehicle trim. I think so far we've only seen the performance and the long range produced at Giga Berlin, but it looks like the rear-wheel drive is coming there, which not too surprising now that Tesla has gotten that up to true volume production, hitting that 5,000 vehicle per week milestone. But we'll keep an eye out for those. I'm not sure exactly on the dates here. We'll see if this can translate fast and get us the dates, but hopefully we see those happen pretty soon. It looks like that's not working. If I had to take a guess, maybe that would be August. I don't know. Well, we'll come back to that and see what those dates are, but that would be happening pretty soon, hopefully for Giga Berlin. All right, next let's take a look at a couple of other countries that have been reporting for sales for the first quarter. Obviously, our focus has been kind of on China, and with Europe, it's kind of tough to gauge until we get all the countries. A lot of countries have had record quarters in Europe this quarter, but obviously based on the sequential growth that we saw, being about 20,000 vehicles for Tesla quarter over quarter, and probably 12,000 of that in China, there wasn't much room for quarter over quarter increases elsewhere. And in Europe, it looks like we're seeing total Europe sales come in slightly below Q4, and the big drivers of that are Germany and the UK. So if we look at Germany here, this is for the total first quarter, just under 21,000 vehicles that were registered, according to KBA there. So on a quarter over quarter basis, that's actually down 34% for Tesla. And for context, the entire industry with the 667,000 vehicles registered for the quarter, that was down about 15%. So technically Tesla losing a little bit of share in the first quarter. Obviously there can be many reasons for that, but it is something to keep an eye on there in Germany, especially as Giga Berlin does get ramped up. Obviously we did see price cuts in Australia, not that that's Europe obviously, but just something to continue to watch out for. And I think as we had talked about with the report where we did see that spread between production and deliveries, it's going to allow those demand concerns to linger, whether that's justified or not, especially when we see those further price cuts in other countries. So Germany, want to keep an eye on it with a little bit softer sales there. And then a similar situation in the UK. The Model Y, the best-selling vehicle in March, the fourth best-selling vehicle for the quarter, for the first quarter. But if we look at the total vehicle sales here, this was down 14% actually on a year-over-year basis for the UK, which is, we've been talking sequentially, but to see that down year over year, not something we typically see for Tesla. And on a quarter over quarter basis, it's actually down, I believe, 40% in the UK. So again, Germany, UK, both big markets. Between the two of them, that's about 20,000 vehicles of fewer sales in Q1 than Q4, which obviously had a big impact on how those sequential numbers came in for Tesla for Q1. So again, we'll keep an eye on those. As for Germany, since I didn't mention the year over year, but I do want to make that clear, still strong year over year, growth for Tesla in Germany, up 44%. They just kind of had a crazy quarter in Q4 in Germany. So it is a high base that Tesla is coming off of, but again, just something that we'll want to watch pretty closely going forward. All right, next up, yesterday we had talked about briefly about the brand finance, ranking Tesla as the most valuable automotive brand. We've got another brand thing here, so I think you guys know how I feel about this in general, but KBB has announced their brand awards for 2023. Tesla, with a lot of recognition here, recognized as the best overall luxury brand, which honestly, I'm not sure that's the one I'd pick for Tesla. But best overall luxury brand, best value luxury brand, I think probably more in the premium segment is how KBB would be defining that. Most refined luxury brand, best performance luxury brand, and then best overall EV brand, all awarded to Tesla. So a strong performance. I'm not sure what KBB uses to make these assessments. May just be their team having a discussion, and that might be it. Nevertheless, wanted to pass that along. All right, and then the last few things here, just kind of wrapping up with other automakers, a little bit Tesla related here though. We've got announcements from Ford, Stellantis, and GM on how the changes to the EV tax credit that we just heard from the Treasury Department, how those are going to impact their current credits. So for Ford, basically, the Ford Lightning is going to remain at that $7,500 credit. The Mach-E and then some of the other lower volume vehicles or some of their plug-in hybrids would be dropping down to a $3,750 credit. So losing a little bit of credit there, aside from the F-150. And then Stellantis, they announced some similar things with some of their plug-in hybrids. Looks like the Chrysler Pacifica staying at that full credit. Again, just based on the battery components, battery materials, clauses that we had talked about. And then for GM, they had previously announced, I think this was on Friday, that they expect that the Lyriq will maintain that full $7,500 credit, but the Bolt and some of their other, I guess just the Bolt would be losing that credit. I'm not sure on the Hummer. That's not covered in this article, but I'm not sure what the MSRP on that is. Might be above the $80,000 cap. So that's kind of the update on those guys. There was a lot of discussion today on various different places about Tesla's credits, and people seem to be saying that there was confirmation that the $7,500 credit will remain for the non-rear wheel drive Model 3 trims that we've talked about, how Tesla talks about reducing that credit being reduced in the design studio. I don't think that has been confirmed. I think people are just seeing this other confirmation from other automakers and then going to Tesla's page and there's no update and then they assume that it's confirmed. So that's my thought on that. I don't think we've got that confirmation yet. Maybe I'm misinformed on that, but that's kind of where I see things standing at the moment. So I do think we're still waiting on it, but as we talked about before, hopefully it's a positive sign for Tesla's expectations of the credit remaining, that they're just talking about that rear wheel drive Model 3 being reduced, obviously using a lithium iron phosphate pack. So we'll see how that comes in, but yeah, I just think there was a little bit of confusion on that today. And then we do have an update from General Motors. We had talked previously about how they had a voluntary separation program, basically looking to reduce their, as CNBC puts it here, their white collar workforce. They say that 5,000 people at GM have taken that offer, basically just a buyout offer. That's about 9%, about 8.5% of their, again, white collar workforce that has taken that. That they said that basically matches their expectations for, what they were hoping to get out of this plan. Whether that is true or not remains to be seen. But in terms of any further layoffs, they say that they think that they're in a position where they can avoid that based on the number of people that have opted into this program. So interesting to see that, and we'll obviously see what happens for GM from there. And then Ford has also given an update on their sort of product lines, and this is one of those occasions where it's like, Tesla made this pretty clear a long time ago, and we're just waiting for other automakers to do this, but Ford has said that they do plan for dramatic reductions in the complexity of their product lineup starting in the 2024 model year. Again, the path that we've seen Tesla set out. So for them to, kind of make these adjustments, I think for Ford, they seem to be communicating the right things, and there are going to be challenges in that, in executing those right things, obviously, as we had talked about with their financials. But with their plans for battery factories, with what they've accomplished so far with the Lightning, they definitely seem to be at least heading in the right direction. But again, executing on that is a whole nother matter. And then lastly for today, we do have an update from Stellantis on the Dodge Ram. So they've announced some of the specs on the recently unveiled EV Ram. and it's got a big battery. So they say they're going to have a couple of trims here, 168 kilowatt hour battery pack. That version would have a targeted range up to 350 miles. Then they also say there will be an optional 229 kilowatt hour battery pack that would move the range up to about 500 miles. So obviously we expect the top end Cybertruck to be in sort of that ballpark as well. As for some of the other specs, they do say that the 0 to 60, again, this is probably the top of the line, but 0 to 60 in 4.4 seconds, the towing capacity, 14,000 pounds, which would, Tesla said 14,000 pounds plus, I think, on the towing capacity. And then maximum payload of 2,700 pounds for the Ram, which Tesla has said max payload for the Cybertruck, 3,500 pounds. So shows some of the comparisons, but obviously the big question on this would be sort of price and volume with that large of a pack. You know, we've kind of already seen this in the Hummer. That can be a little bit prohibitive in terms of, you know, the pricing certainly, and then obviously ramping that to significant volume as well. Overall though, you know, we'll see how the Cybertruck compares. Tesla will have a big pack on the Cybertruck too, probably smaller than that, but you know, trucks in general are just going to need a lot of kilowatt hours, especially if you're doing things like towing. All right, that was a long one, but I think that's where we'll wrap it up for today. So as always, thank you for listening. Make sure you're subscribed and signed up for notifications. You can also find me on Twitter at Tesla Podcast. And we'll see you tomorrow for the Thursday, April 6th episode of Tesla Daily. Thank you.